Hello traders and welcome to another video review. Today is Tuesday, March 11th, 2025. Let's take a look at the economic calendar for today. During the Asian sessions, we got plenty of data from Japan. Household spending, minus 4.5%. That doesn't look good at all. Worse than expected forecast of minus 1.9 and definitely won the previous reading of 2.3%. GDP is better than the previous one, but worse than expected. Forecast was 0.7. GDP is 0.6. Annualized GDP in Japan 2.2%. Quite nice, more than the previous one reading of 1.2%. Now we enter the London session. What do we have? Eurogroup meeting starts at 11, and that's about it. JOLTS jobs openings data from the USA are scheduled for release at 3 o'clock. Then we got WASDE report, and at 5 o'clock at the same time we got the short-term energy outlook. At 6 o'clock, free and note action will take place, and then at 9:30 we got API weekly crude oil stock data. At the end of the day, data from the New Zealand are scheduled for release at 10:45. Electronic card retail says data are expected. So pretty easy day for the traders in terms of the macro data releases. We got only two very important data releases during the US session: JOLTS jobs openings and AIA short-term energy outlook. So without any further ado, let's take a look at charts. We start with euro dollar. Euro-dollar 4-hour chart is showing the strength. The bulls definitely want to test the level of 1.0941, the level of the previous technical resistance. You possibly know what I'm talking about. This is that level here, 1.0940, and this is where the next target is for the bulls. In terms of the Elliott wave, if you would like to count this current impulsive wave scenario, definitely from the lows we got the wave 1, then we have the correction wave 2, and then we got the wave 1, 2, 3, 4, 5. There is some sort of the wave 1 in the lesser degree. Okay, so this is still the wave 3 in progress. Let me just take a look here once again. There you go. So from the bottom there's a wave 1, there's a wave 2, 1, 2, 1, 2, 3, 4, 5. That's not even okay, wave 2, let me just place it. There you go. Wave 3 is still in progress. Wave 4 and wave 5. If this is a big impulsive rally, we are still in wave 3. Okay, so we're developing wave 3. Where is my demand zone going? There you go. Back on the place. There you go. And when the wave 3 is done, then correction wave 4 will be done, and then we are waiting for the wave 5. Please remember, this scenario is valid as long as the high of the wave 1, which is of course the demand zone, is not violated. It's not basically broken, is not tested or something like this. So all we need to do is to wait for the wave 3 to be completed, wave 4 to develop to the downside, obviously, because it's a correction, but it cannot overlap the wave 1, and then wave 5 to the upside should be in progress. Let's take a look at the very interesting chart of S&P 500 4-hour time frame chart. Look at this. That's a very unsettling situation here on the S&P 500, because we're going down like no tomorrow, and that's the biggest movement to the downside. And if we just let me just move this one. There you go. We are below the major support now, of course, the resistance and the supply zone. We broke below 5,694, and now we keep going lower despite the fact that the market conditions are extremely oversold, which means we are trending. Short-term trend is down on S&P 500, and that might be just the beginning, because we've done only, in terms of the percentage, obviously, right? We've done only, let me just, there you go. We grab it perfectly. That's minus, well, 9.7, basically 10%. 10% during the uptrend is like a very nice healthy correction, no problem whatsoever. But if there is no attempt to rally or pull back higher during this movement to the downside, during this, I don't know, beginning of the sell-off, maybe beginning of the correction, whatever it is, downswing anyway, then the chances that the market will go back to the uptrend are lower. So it looks like minus 10% should be enough for the bulls and bears to realize that, okay, now what do we do next? We are below on a daily time frame chart. This is 4 hour, but on the daily, I can't show you because the data are not accurate. On the higher time frames, we are below 100 periods moving average and below 200 periods moving average. That's not good data at all, because we know that traders in the US and all over the world, they love 200 and 100 periods moving average and 55 days moving average. And if we move below this moving average, then the chances for this market to continue lower are really, really high. All right, now we got data from the API. So let's take a look at the crude oil. Crude oil is looking very similar. Look at this. $66 per barrel of oil, down from the swing high at 80. Again, this is a huge swing to the downside. Yeah, even if we just consider this, that's, even if we consider this one, there you go. This is the top, this is the bottom. It would be at least 10%. Yeah, there you go. That's 19%. Sorry, yeah, my bad. 19% down. We are 19% down in the prices of the crude oil. And this is the base. If we analyze the crude oil, this is the base. There you go. Look at this. Roughly around here. 66, 67. Okay. That's another base. Base level. This is one. 66.94. Both of them are violated. So right now, if there will be a test and the bulls wanted to move higher, but they failed, if there is a failure of the test, we will move lower on the crude oil. And it looks like no one wants the higher prices of the crude oil so far, which means the lower prices are coming. And last but not least, the Bitcoin with new low. New swing low was made at the level of 76,562. Now we are bouncing back up a little bit, but it doesn't actually mean that we are back to the uptrend. No. We are getting closer and closer to our target level. Please remember, $74,000. This is the level apparently that was, and it is right now, the technical support, because it is made. Oh no, we are gone again. Yes, this is that level. The high of the rally from the 2024 that has not been tested yet, and these three lines constitute some sort of the what? Yes, demand zone. Yes, exactly, demand zone. So if we place our rectangle yet again, what do we have here is a very nice, strong demand zone. Okay, so that's the first thing. Let me just show you the weekly chart. Okay, and as far as I'm concerned, what some of you might see here on this chart is, some of you see cap and a handle, and that was apparently very nice. So we are of course rallying. Now we are testing the breakout of a handle. That's the first pattern, but some of you might see inverted headed shoulders, right? So we go up, we got left shoulder, head, right shoulder, and we go up. Inverted head and shoulders pattern is a bullish pattern. So we got two bullish patterns, cap and a handle, in potentially inverted head and shoulder pattern. So why are we going down? We're going down on Bitcoin because it looks like bears wants to test the demand zone, especially $74,000 level, because it has not been tested strong enough. So keep an eye on the current developments on the Bitcoin. We are very, very close to this level. We can see some bullish divergence between the price and the momentum. We might see some spike to the downside and then rebound to the upside very, very soon. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye-bye.